Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Oliver Rust, Head of Product at Truflation. We're actually to talk about some macro here at the Fintech Conference. Oliver, it's great to see you. Welcome to TradeTalks.
Thanks for having me.
Give us some background on Truflation, because we're going to focus on the macro here, inflation, Fed strategy. Give us some background.
So Truflation is an alternative measurement tool for inflation. We aggregate it from about 30, 40 different data sources. We're tracking about 15 million items of prices of goods and services, and we report the data daily.
Is there a difference what you're seeing in terms of inflation than what we might see from Fed data?
Yeah, we feel that our data is a much more timely based representation of what's going to happen in the future. We see that the Fed, through the BLS data that's released from the Bureau of Labor and Statistics, lags about 9 months on certain categories. On other like in housing in particular, on other categories it lags maybe 1 month. It depends on the frequency of purchases of certain categories. So based on the data that you're seeing from Truflation, what is it telling you in terms of the Fed and inflation being here for longer, or have we just reset and this is the environment that we're in right now? So yeah, it's really interesting. So we think the inflation is here to stay. We think the easy disinflation is over, and the most recent report came out, I think on Tuesday, highlights that. It dropped from 3.7 to 3.2. And that really reinforces that the easy disinflation is over, because the core inflation is held relatively stable. It went from 4.1 to 4, but the big drivers behind that are things like, if you want to get it down further, we're going to have to address things like the deglobalization that's occurring. That's one aspect we have to address. We're going to have to address the cost of capital, right? And you're going to have to address things like the eroding middle class in the US, which was the driver of the consumer-based growth.
Well, let's talk about demographic shifts. How do you think this is going to impact that?
So I think the demographic shifts, in the US, we've lost about 10% of the middle class for the last two and a half, 3 decades. And that's a big shift, right? And they were polarizing the country. And that then creates more instability and what's fueling that growth, right? And the bulk of that middle class has moved. Fewer have moved up into the upper class versus moved down into the lower class, and that creates this greater polarization.
What about globalization or deglobalization?
Yeah, that's a big one. I think that's a real fundamental one, right? You think about the impact that China had on the global economy by keeping inflation down. The question now is the US is also trying to bring back green energy back into the US as the infrastructure, the semiconductor bills. They're all trying to onshore activities, which is all just going to increase prices in the long run. So how do you address that while the consumer still maintaining a lower price point to pay for products and services?
Right, and of course you have cost of capital. I mean, that has impacted whether it's small, medium-sized business, even the larger corporates and so forth. I don't even think anyone projected just how quickly interest rates were going to move in such a small span.
Yeah, exactly. And you think about Amazon, you think about Facebook, you think about all these companies, and not only Silicon Valley but everywhere. Would they have been as big as they were in the high interest rate market that we're living in today? Not a chance, right? They grew in a market where interest rates were really low, and that's what's helped them. And that is drying up not only investment or cost of capital, also hedge funds. There's less cash going invested in hedge funds, except of course for AI activities, which is still pretty active.
Right, and we see it in the private markets. I mean, the valuation reset has, which is one of the reasons why new issues coming to market has been relatively muted, with the exception of a few larger names out there. As you look forward to the fourth quarter and going into 2024, we're almost done with the fourth quarter. What's your outlook there?
Yeah, so we think inflation is going to go up. The market has certainly reacted to the inflation dropping this month, the last couple of days. I think the outlook for quarter 4 is going to be relatively stable. We're particularly concerned about the cost of services, given the wage hikes and unemployment. Yes, we're seeing some softening there, but it's got to soften a bit more to see that coming down. I think then you also got the cost of oil. You got currently, 50% of the oil prices translates into gas prices. So, you look at the war with Israel and Hamas, you look at OPEC curbing production, that's only going to raise prices. So that is a bit more of an impact on higher prices going into 2024. And then I think you got the housing market, right? The housing market has been really stuck on this increased prices because of lack of supply. So more supply has got to come into the housing market for real inflation to start coming down.
Is that specific to the US, or are you seeing the housing issues globally as well?
We're seeing it elsewhere, but the extent of the lack of housing supply is really in the US. And I think you look at the UK with the prices coming down as well. You look at the price of material goods that is used for construction, they've all gone up, right? And so it's how do they come down and when you start to, that will start to drive greater supply in the marketplace.
All right, Oliver, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.